Hello and welcome to Fireside with a VC. My name is Andrew Romans and I'm very happy to have my old friend Mohanjit Jolly on the podcast. Mohanjit, great to see you.
Thank you so much, Andrew. Great to be here.
Yeah, so Mohanjit, we first met when you were a managing director at DFJ, but you were in the venture game with uh, Guy Kawasaki and Bill Reichert at Garage Ventures before that. Uh, Tell us quickly, how did you go from MIT and UCLA to Silicon Valley Venture Capital?
Yeah, no, it's an interesting journey, and my journey as a VC is a bunch of inflections or step functions along the way. So, post UCLA, post my MBA, I was at Mattel, the toy company, actually doing some interesting technology work and launching a new brand called Intel Play. It was a JV between Mattel and Intel. And I got a cold call effectively from Guy Kawasaki. He said, what are you doing playing with Barbie dolls? Come to Silicon Valley. This is where things are happening. It was late 98. And he had launched this boutique investment bank called Garage.com. And so that actually led to my wife and I, recently been married, packed a U-Haul and drove north on I-5, ended up in a one-bedroom shack in Menlo Park, and joined Guy on what turned out to be an 8-year journey from Garage.com, which was again a boutique investment banking business, to Garage Technology Ventures post the .com bubble bursting. We had to sort of reinvent ourselves, and thankfully we had some capital on our balance sheet, and CalPERS was willing to match it. So we raised a $20 million seed stage fund and called it Garage Technology Ventures. So I am an accidental venture capitalist from that standpoint, basically pivoting from helping companies raise capital to directly writing 250K to 500K checks in seed stage technology companies. And then until just fast forwarding a little bit, late 06, ended up running into a gentleman named Rajat Luru, who was a partner at DFJ, actually on a business plan jury in India, of all places. And he said, look, we've raised a $600+ million Fund 9 at DFJ, and Tim Draper and I have been investing in India remotely. And now we would like to bring on a partner level person to set up our shop in India. Do you know of anyone? And I said, well, let me put my turban in the ring, and you might want to, would you be willing to consider me? And that led to, my joining DFJ in early 07. And I was with them pretty much till January of 2016, almost 9 years. And at which point my partners and I launched this new venture, which is a mid-stage technology fund for companies building product from India. And we can get more into that. But basically, a cold call from Guy leading to Garage, a random meeting with Rajat Luru in Hyderabad, India, leading to DFJ. And then one of my now partners approaching me in 2015 and saying, hey, I see a white space in India. Let's go make something happen, which then led to Iron Pillar.
Garage is a great name and garage.com is a great domain. I jokingly say the reason all these companies like Hewlett Packard and Apple Computer were founded in a garage is because if you've ever been to the peninsula, that's the biggest room in the house.
Right.
Literally, the garage is your best place to get cracking. And I think you guys were working with John Kraft, right, at Pandora. Wasn't that a garage deal?
It was. So I believe it was not one that I was directly involved with. I think Bill Reichert was. It was a combination of helping Pandora raise capital. And then our business model was we would basically take fees and reinvest them back into our companies, at least either a portion or up to 100%. So that the company saw us as not just transaction-oriented bankers, but really shareholders who would end up on the cap table. And so that was a journey we were on with John, and we think influential in getting the company off the ground.
Yeah, it's a great story. He shares his story in my first book where Pandora was one of the first real IPOs when the window opened up after the nuclear winter, recovery from the dot-com crash. But not an overnight success. He failed to meet payroll 22 times. That's how rough. That's how
Wow.
rough the entrepreneurial roller coaster was before getting to, eventually a NASDAQ listing, which, is considered a pretty great outcome. So talk about the early days of investing in venture capital in India with DFJ. What was that like? How is the venture ecosystem different? What are the pitfalls, or what did you learn there?
Yeah, look, I mean, let me start out by saying that India is sort of in this version 4.0 of the VC ecosystem development. Version 1 really was the tourist VC phase, where folks like Tim Draper and Rajat Luru and many others would go to India. This is in the early 2000s. I mean, there are some folks like Tim's dad, Bill Draper, who started
Yeah,
investing in India back in the 80s. But he was an exception. The first real sandhill wave, if you will, came in the early 2000s, and the tourist VC phase, where folks would go there, make an investment, come back. There was no physical presence per se for a vast majority of them. Version 2.0 was the what I call the satellite VC phase, where folks like myself for DFJ and Kleiner had a gentleman there, and Kanan had a presence there. But the decision making was very much Silicon Valley, but at least there was an office with a person or a small team that would look after sourcing deals and managing investments. Then came version 3.0, which is when you really started to see the first homegrown venture firms. So an entity called Kalari, which is now called Kalari, was an NEA spinoff called NEA Indo-US. There was Helion Ventures, Nexus, Inventus. Some of these folks came up. And then there was also this wave of the well-known Sandhill or Silicon Valley names such as Excel and Sequoia and Matrix, either outright acquiring entities in India, which Excel and Sequoia did, or effectively licensing their name, if you will, but really helping on the ground teams in India raise capital and leverage the Sandhill names, if you will, and that's where I would put firms like Matrix and Mayfield into that bucket. Now we're in sort of the version 4.0, which is the resurgence of the next phase of tourist VCs. So meaning, folks like Insight and General Catalyst and Charles River and folks of that ilk now saying, you know what, India has now matured, where both the quality of the startups coming out, and there are some data points around exits, potentially listings that are going to be happening over the next 12 to 24 months. So now there's that foundation that has been laid for us to go in and start writing meaningful checks. One of the other barometers of looking at, I suppose, the maturation of the ecosystem is looking at the number of unicorns that exist in that particular geography. And we at Iron Pillar have done fairly deep sort of grounds up analysis. And we released a report, although it's outdated, very much outdated today. It was released last November, at which point there were something like 32 unicorns. I think the number is now closer to 50, which is a combination of India for India companies, which are very well known, the Olas and Oyos of the world. But also what's interesting is the enterprise-centric companies and startups that have really scaled. So the likes of a Dhruva, a Freshworks, a Postman, and Inmobi, these are, billion-dollar plus entities that got their seeding and got their product market fit initially in India and then decided to go global. And, one of the other things I would say is just a mindset shift. I remember when I was in India in 07, 08, even pre-financial crisis, my pet peeve was that the Indian entrepreneurs were not thinking big enough. They were saying, hey, if I get to a 10 million, maybe a 20 million revenue, target, that would be absolutely amazing. And there is a notion of success begets success, right? Something we take for granted in Silicon Valley, but it wasn't really till the watershed moment of a Flipkart that happened in India with Walmart acquiring, 80% of it, and having this sort of wealth creation happen, which spawned other companies, which spawned the angel investment community, that India really came onto the radar more globally from a startup standpoint. And so both entrepreneurs as well as investors started really thinking that, hey, we can have a 10, 20, 50x kind of outcome by investing in companies in India. And that's a story, the promise had always been there. So even folks who started investing back in 2000 were saying, hey, India is the next China. So can we find the next Baidu, the next Kongjong, the next, Focus Media, what have you. And it just took time because the underlying metrics and underlying sort of, whether it's, per capita income, the rising middle class, technology connectivity, all of the trends, both technology and underlying demographics, that had to sort of reach critical mass before you could start creating really massive outcomes. And I think we're there now. And barring a man-made or natural catastrophe of ridiculous proportions, I think the next couple of decades are going to be absolutely tremendous for India, and especially startups that are born in India or leverage India in some way, shape, or form.
I remember the mindset. My first job out of undergrad was I was a Unix headhunter, and I was talking to software engineers all day long about changing jobs. And I remember in the beginning, if you offered stock options to Indians that are typically in Silicon Valley or in the US, stock options are saying, hey, that doesn't pay for diapers. I need hourly rate dollars now. And it was just like, you just knew it when you got on the phone with a guy that you figure out is originally from India. He's just not listening to the offer on the stock options. And then a few years later, they were like,
Right.
hey, show me the stock options. If there's no options, I'm not coming, because they've seen someone else get rich and buy a big house. And they're saying, well, that was dumb of me to not pay attention to the equity side of this situation. So the total shift in mindset. So Mohanjit, how unified or how fragmented is the Indian market? From a distance, it just looks like one huge country that if you could sell your wares there, you could be a very, very big company. But it seems like it's more of a federation. What is the expansion across India for you scale ups?
Yeah. So look, two ways to answer the question. So I think on the consumer side, yes, it's a conglomeration of mini nation states, different languages, different cultures, religious diversity, clearly mindset diversity, risk taking. Varies from state to state. Literacy, Kerala is a highly literate state, whereas Bihar and Uttar Pradesh in the north are not. Gujaratis on the west are very business minded, and the business acumen is very, very strong, whereas perhaps folks in the east and in Bengal and so on may not be. They're more academics, and look at more traditional professions as meaningful. So the north, where I come from, there's a lot of overpromise and under-delivering. If you ask somebody, hey, can you get this done? They'll say, hey, done. Imagine it's done, even though they have no clue how and when they might be able to deliver something. So yes, so India is very, very diverse. And what I tell companies, whether they're startups or established ones, out here in the US or Europe, saying, hey, India, 1.3 billion people, rising middle class, GDP growing, et cetera. It's a massive opportunity. And I say absolutely yes, but, and it's a strong but, you have to know your market, really understand your addressable market. Are you going in the top tier metros of Delhi, Bangalore, Mumbai, Chennai, Hyderabad, et cetera? Are you going after the tier 2 towns? Are you a base of the pyramid kind of play, in which case the go-to-market and the channels and the partners have to be completely different? And so I think what's interesting is there is, there are large markets, no matter how you slice and dice the overall matrix across geographies, the different states, and or the social strata. So going after the top 1% iPhone latest, version carrying populace is a totally different ballgame than it is to, to the rising middle class, than it is to the base of the pyramid in tier 3 and 4 towns. But what's amazing to me is companies are being created and companies are scaling massively across the entire spectrum, right? So even folks who you think cannot afford anything, are buying through social commerce applications. There's pent-up demand to buy, brands, and then fintech companies are coming in and saying, hey, it's fine to do it on EMIs or on the basis of paying, monthly, either subscription or monthly sort of premiums to eventually own a particular product. New type of fintech companies are coming in to say, hey, we'll make the process of leveraging gold to get cash in a way that's technology enabled, and it's not the crazy 50 to 100% interest that others will charge. Rather, we'll make it more meaningful and create competition for your rupee or for your business. So I think it's very, very important. The key point is very important to understand. Yes, it's a large market collectively, but one has to slice and dice to really make sure that you're not getting fooled by this sort of 30,000 foot view of a shining multi-billion-dollar market, but rather you understand the nuances, the challenges, and the subsegments within each state and within the socioeconomic strata.
What has the growth in India been for the last kind of 10, 20 years, maybe compared to China? And also, what is the growth of the IT sector? Because I think that the entire economy has its certain numbers, but the growth of just the IT sector is quite staggering.
Yeah, so I wish I should have had the numbers off the top of my head, but what I will say is, the IT sector is in the high tens of billions of dollars per year, and the GDP growth rate, yes, this year and perhaps last year notwithstanding, India has been somewhere in the, call it 6 to 8%. On average for the past many number of years, and God willing, once we're through the pandemic and things normalize a bit again, we should be able to get back on track to growing towards becoming the top 4 or 5 countries by GDP. In the world. I think we're making progress every year in terms of getting to that point. Now, I think one of the things that one has to think about and look at is this sort of GDP per capita number, which I think really created an inflection for China once it approached something like $2,500 to $3,000 per person. I think maybe the number is even higher than that. So in India, it's sort of less than 2,000 right now, but we're steadily rising with the rising GDP. Obviously, the population is rising as well. So, but I think the GDP rise is faster, or at least anticipated to be faster than population growth going forward. So that number should creep upwards. Having said all that, I think I have to give kudos to the government as well for especially bringing technology to create or to reduce friction in the system, whether it's middlemen who are charging fees across the board, whether it's consumer or farmers or other businesses. Or it's just inclusion in the financial system overall. I think once people get included in the financial system and have access to cheaper but still very relatively smart versions of mobile devices, which is the case, by the way, in India, It has the least expensive smartphones in the world, and it has the lowest data rate in the world.
What do
And
they
as a
cost?
I'm sorry.
What does it cost for a smartphone in India these days?
So you can get actually a fairly reasonable smartphone for somewhere around $50 to $60,
Okay,
right?
better than
So
$1,000 for I pay too much. Right.
yeah, exactly. So I think you can, um, uh, there were some homegrown brands, but especially I think the Chinese with the Oppos and the Vivos coming into the market, you're sort of getting to that point where an average person can afford a smartphone. Just to give you an idea, there's a gentleman who takes care of my home in Bangalore, and so his ask always is, "Sir, if when you come next, can you please get me, one older version of an iPhone?" Right. So here's the person from Bihar who's self-educated, self-taught. He's learned how to use, he's taught himself English, bought a secondhand sort of laptop. He gets online, he consumes, and thanks to, Mukesh Ambani and Reliance Jio, they were able to really bring, ultra low cost connectivity and bandwidth throughout the country. And what they did to get people sort of hooked is it was an all you can eat for effectively either free or a very low price initially for a period of many months. And that's when the populace actually got a taste of what consuming video is like, and what playing games and really having these engaging apps is like. And once a customer or a consumer gets used to that, there's no turning back, right? So then it's just one thing after another, and folks like Netflix and others saw that as a key trend, and as a result, no matter which social media company you look at or what entertainment company you look at, in terms of the growth rate, I would argue that India is probably number one for if not all of them, then a vast majority of them.
Amazing. And so let's talk about the Iron Pillar strategy. When did you get started? You and Anand, I think, set it up a few years ago now.
Right.
And I know you've actually successfully raised a lot of money during the pandemic, which is extremely impressive. What's the basic strategy and pitch?
Yeah. So when Anand approached me back in 2015, the thesis was fairly simple. He said, look, there is plenty of activity that's happening in the seed and Series A level, and then there's plenty of activity in sort of late stage private equity, but there isn't a sort of custom built, bespoke team and fund for mid stage, so Series B and C primarily. So companies that are raising, call it 10 to $50 million rounds. And I told him he was actually preaching to the choir, because when I was in India with DFJ, this was precisely the chasm that I would run into, where it's I would do the Series A, but then there wasn't really a set of go-to Series B players at that time. And so I said, this sounds great, but at the same time, I'm in the business which is all about people. So while I had met Anand in the past, we had never worked together. And so I said, let's date. So we dated for most of 2015, and early 2016, we pulled the team together and launched Iron Pillar. In 16, we actually realized we were a first-time team, a first-time fund, and therefore it's the highest hurdle to cross to raise capital in our business. And we're old enough to be self-aware of that. And so we said, okay, let's not go out and raise money right away. Thankfully, we had, IIFL, which is the largest wealth management firm in India, provide a warehousing facility to us. So we could look at, we looked at over 100 companies, and we made 2 investments. This is before going out and formally fundraising. On the heels of that, we launched a formal fundraise in early 17, had an initial close in summer of 17, had a final close really in summer of 18 on 90 million, 90. And we're the only fund in the world that has the distinction of having both the Indian government and the US government as LPs in the fund. And not to digress on that front, but we got the fund raised. We've invested in 8 companies. We've exited one. We sold a company called Now Floats to Reliance Geo. And of the 7 companies, all are doing well. 3 are doing exceptionally well. And so, to the point you alluded to, which is, we decided, Anand, the Ashok, and I, the 3 partners, we said, let's go out and raise a top-up fund to double down on these 3 winning companies, which is what we did in the middle of this pandemic. And to our amazement, we went out looking for 30 million. We got oversubscribed in 7 weeks and ended up closing on 45, which, by the way, has been topped up a little bit more. So it's now closer to 50 million in this top-up fund. So that was an incredible endorsement. And most of the capital came from new institutional LPs, which is even more remarkable, because they had, they could have just said, no, the world is coming to an end. And this is April, May timeframe. And they could have pulled out, but they said, we love what you guys are doing. We love how the companies are performing. And we've been tracking you guys for the last, 2-3 years. And we want to back you and hopefully continue to back you for years to come and for future funds. So Fund 1 was a combination of what we call India for India, which is consumer and small business, as well as India for the world, which is enterprise centric, so B2B plays. So 5 of the 8 companies, it turns out, in our Fund 1 portfolio are actually enterprise leaning rather than consumer leaning. And what we're going to do with Fund 2 really is focus at Iron Pillar exclusively on enterprise centric companies, primarily cloud software, SaaS type plays that either start in India and then move to the US, sort of like the Dhruvas and Freshworks that I mentioned earlier, or they could be started by Indian entrepreneurs, let's say here in Silicon Valley, but are doing their product development and have a significant chunk of the team actually in India. So this is where the likes of a Nutanix or a Zscaler or ThoughtSpot, Rubrik, AppDynamics, those types of companies, come to mind. But still sticking to our Series B and C primarily, stage focus. So that's the idea with the next fund.
Yeah, I think that a lot of evolving ecosystems, like every mayor in the world wants a Silicon Valley in their city and in their province, their country. I think a lot of these ecosystems, the government puts a lot of money into these funds, and they think seed and Series A will create jobs, but growth is just Occupy Wall Street taking the piss on raising big, huge funds. But in reality, you need the growth capital,
right,
so that the company can get ultimately an IPO and become a consolidator. And if you don't get that, you'll just have everyone being sold. It's like you see it in Europe, you see it in Israel. The companies get an offer to sell, and they don't have an offer to raise more money. And because there is no iron pillar in that country. If you have that growth money, then you can bring a company from a Series A up to an actual listing, and then maybe they are the consolidator that buys companies. And then you've got a vibrant ecosystems of VCs and big balance sheet buyer, which we've seen it blossom in China. You don't really see it in Europe. So I think you're playing an important role in history there, Mohanjit, even for the development.
History will tell if that's the case. But I agree with you. I think that's just the natural maturation that happens. So you'll end up with certain funds that become sector specific, as and when obviously the volume reaches a critical mass where you can have your pickings and you can have 15 to 20 companies per fund that focus only on, call it health or fintech or what have you. In our case, it's more of a stage focus, and that's also a sign of a maturing ecosystem. And so our entry point is we want companies to be somewhere between sort of 4 million to call it 10 million ARR.
Okay.
And a lot. Yeah. So there are a lot of, the early stage guys, of course, they come in when the valuation is low. They want reasonable ownership. They're patient capital, and they're looking for their, massive 15, 20, 30x. And that's just the way the early stage model and especially the seed stage model works. In our case, we want some of that product market fit risk address some of the business model risk addressed, but clearly there's this chasm that needs to be jumped to that psychologically important 10 million ARR when there are a bunch of other folks who say, you know what, that's our entry point, right? So at that point, we know that, there's a clear fit, the sales machinery is working, and potentially there's a marquee list of, global companies. And so what we do is we roll up our sleeves and really help companies get from that low single digit million ARR to a low double digit million ARR, where the systems are in place, where the team has been filled out, where doors have been opened, especially global customers as well as channel partners. And that's I spend quite a bit of my time both creating new relationships and harnessing old ones and making those introductions for our portfolio companies. I think that and the fact is, we don't have a lot of baggage perhaps of legacy portfolio companies. So there are 7 existing Fund 1 companies across 3 partners. So you can do the math. So plenty of bandwidth to be able to really get involved, not in a push kind of way, but we have our entrepreneurs saying, hey, Mohanjit, Anand, Ashok, can you please help us think through XYZ, or can you help us open a door in the Middle East or certain part of MENA or LATAM or Europe, where we have we have networks or networks of networks, and we go to work for these portfolio companies.
So I don't know your third partner, but I know Anand, and he lived in China. He's in the Middle East. You're in the Valley. My understanding is that you take that growth company that's from India or Indian entrepreneurs with big operations in India, and then you guys are able to take him to the Valley, take him to these other ecosystems for hopefully global domination, of these companies.
Absolutely. Look, I'll give you an example. I'll give you a couple of examples. One is, so one of our companies is called Fresh to Home. It's the largest online fish, poultry, produce, dairy company in India, primarily fish at this point, and they've actually extended to the Middle East in large part because of Anand's presence there and the connections we've been able to make. Now, they also announced recently a $121 million Series C investment, and it turns out that roughly 60 million of that, so half of that, actually came either directly from Iron Pillar or through our LPs or friendly networks. So it's opening doors, and it's providing access to downstream value added or value add capital in perhaps pockets of the world that may be not obvious, right, to many other existing investors on the cap table or even entrepreneurs. So they are absolutely amazed. And again, from a best practices standpoint, Anand took Sean, the founder of Fresh to Home, to China to meet with Meituan and Pinduoduo and other companies in the logistics and fresh food domain to learn how did they scale, what were the lessons learned, what were the mistakes that they made. And again, those are kinds of interactions that are incredibly valuable for entrepreneurs, like Sean. So that's an example. Another one is we have a company called Servify, which is in the device lifecycle management and warranty management space. It's a software focused play. Think about an Ashorian, which is a pseudo monopoly in the US. So this is a company that's looking to disrupt that particular market. Started in India, has every single OEM relationship there, but the OEMs are now pulling them in different parts of the world. Pulling them. Apple is taking them to Europe, and Samsung to other parts of Asia, and OnePlus bringing them to the US. And then I have been able to connect them with Apple Cupertino and the likes of AT&T and others, where those are connections hopefully that that pay dividends downstream. So, and I have standing calls, even though I may not be on the board, but the relationship we have among the 3 partners is it's a collective force, right? Mm-hmm. So if Mohanjit, you can bring something to the table to certify that's Silicon Valley specific, or Ashok, if you can bring something to the table that's India or Southeast Asia specific, or Anand has connections in Europe and the Middle East, we work as a unit. And so, everybody is incented to provide the value that's necessary to create massive outcomes for our LPs, our entrepreneurs, and eventually us, in that, perhaps in that order.
Sure, sure. And what does the exit market look like in India these days? In certain parts of the world, they don't really think of exits; they just think of dividends.
Right.
And living off, company house, company boat, company second house.
Yeah, yeah.
What happens there? Is it M&A robust? Do people IPO companies over there?
Look, what I'll say is, the exit mechanism thus far. So Flipkart, of course, is the largest of its kind, but the other exit mechanisms have been a combination of secondaries. So a lot of secondaries have provided cash back to early investors and VCs.
Mm-hmm.
M&A, although that is, it's not the massive outcomes that one might think about either in Israel or Europe or elsewhere. Having said that, there have been a few larger ones. Most of them have been smaller, sort of technology or team acquisitions. So I will say that particular mode of exit has yet to still blossom. And on the IPO front, I think two things. One is there are companies that are now that have now gone public in India on the BSE, the Bombay Stock Exchange, as well as there is now a pipeline of really interesting and compelling opportunities that's building to list, whether on the Nasdaq or the NYSE here in the U.S. And that's where I put companies like a Dhruva, Freshworks, and Mobi, and companies of that ilk, again, that were born in India but really are global plays. So not quite there yet. You have to sort of look at India from a relative rather than absolute lens sometimes. And from a relative lens, clearly the activity is up and to the right. But from an absolute number basis today, you can't really compare it to either China or India just yet. But I am confident that basically in the next 18 to 24 months, it's going to be a very different story. And again, the creation of these unicorns is a proxy, right? So there are more unicorns that are created faster than ever before in the history of Indian startup ecosystem. And I think that is a leading indicator of what's to come in the next 2 to 3 years and beyond.
Well, you definitely have to have the right team to do this. I mean, I remember sitting in Bill Draper's office after he had exited India, and it sounded like it was a noble endeavor, but it was a bit of a bloodbath. I think you got to have the right Indian guys who know what's going on, who can, what's confusion to me would be clarity to you of
Right.
what people are saying and what they're telling you. But when you think of the efficiency of it all, and the low cost labor arbitrage opportunity of China is leaving China because it's now very expensive to buy an apartment anywhere, in that country, in the places that you want to be. Any Chinese VC you meet is saying his buzzwords are robots, drones, automation, AI. They want to automate the factory and stop it from going to India. But if you've got real tech companies, you're hitting them at that growth stage that Iron Pillar is sitting at, it would be hard for a purely American company to compete with a company that has the efficiencies of India. I could see that strategy just working.
Yeah, look, I mean, so a couple of things. So on the Bill Draper point, I think timing and policy are two issues that that have evolved. Is it perfect yet? No. There's still some issues around taxation and things keep shifting a little bit on the policy side, which make investors sometime nervous because they don't like unpredictability, right? And so I think India needs to do a better job of giving more comfort. Although again, from on a relative basis, it's a much more robust system of investment and repatriation, if you will, or getting cash out of the country than it was 20 plus years ago when Bill was investing there. Now, coming back to the efficiency point that you raised, absolutely. I mean, I think that's why. So a couple of things. One is, again, India is young. India is aspirational. India graduates more, has more college graduates really than any other country in the world. And it's and one might argue, well, what's the quality of that education and so on and so
Well,
forth.
the IIT is pretty well known, although
Right.
didn't they kind of, it used to be there was a couple of IIT, India Institutes of Technologies, and it was all kind of like Harvard quality, and then all of a sudden they made thousands of them.
No, it's not. It's not thousands. I don't know what the number exactly is, but it's it's in the low tens.
Okay.
So they brought some of the really good technical universities in different parts of India into the IIT fold, both from a workflow standpoint, system standpoint, sharing of content and expertise standpoint. So I think the caliber is still remarkable. It's very, very difficult to get in. Having said that, yes, the numbers have grown, but it's not hundreds, et cetera. But I should know the number off the top of my head, but I want to say probably somewhere in the between a 20 and 30 sort of a number of universities that are in the IIT framework would be my guess.
Even if the quality of the education was not stellar, the simple fact of how many applicants apply for one seat, that's just a Darwinist thing. I mean, if 1,000 people apply for every one MBA that gets in, then that guy shouldn't be that stupid. She should be pretty sharp if she outbeat 1,000 other applicants. Those are the numbers that always freak me out. I'm like, how the hell can anyone ever get in if it's like
no? That's why there are small cities, especially in a place in Rajasthan called Kota, for example, where the entire city is around preparing applicants for IIT application process, and so there's an ecosystem that has evolved. So it's almost like, how should I describe it? It's like a boarding school for IIT prep. And you go there, you pay money, and there are different institutions of learning that prepare you for those exams, and their reputation is directly correlated with the number of folks from that institution that actually get admitted to IITs and what the percentage is, and so on and so forth. So it's a thriving ecosystem. Yeah,
that's the same thing really as Andover, Choate, Exeter. All those, you pay up and, someone's, negotiating getting you into Georgetown or getting you into, like, they're literally take this bad one and then you get the athlete.
Yeah, it's not, I don't think it's that's going on in India. I think it's just that these guys have over decades figured out what the system is, and they are going to just ram that into you so that as and when that exam comes, you are just prepared. It's closer to an SAT or ACT plus.
Okay.
Which is just but you if I understand it correctly, it's your normal education, but with a focus on preparing you for these very, very difficult examinations to get into IIT. But one other thing I do want to mention in terms of the efficiency part of India, and that's why our focus with Fund 2 is going to be enterprises. You do have incredible talent, right? From a development standpoint, whether it's software engineers, cloud specialists, who are both coming out of the Infosys, Wipro, TCSs of the world, and also, moving back to India from,
Right.
companies like an Amazon, Google, Microsoft, et cetera, or spinning out of their, offshore development centers and saying, we can go ahead and start companies. We just invested. I can't share the name yet because it'll be announced formally in the next couple of weeks. But we just invested in a cloud governance company that's a Seattle, Chennai based group. 80% is actually in Chennai. 20% of the team is in Seattle. But these are guys who were actually instrumental in building Azure, right? So they understand that entire stack, inside out, because they built it. And so tapping into that level of expertise, both here in terms of front end sales and marketing, and the development sitting in Chennai, because these are guys who did it when they were at the consulting company that built Azure for Microsoft. I think that is the value proposition.
Yeah.
Costs are still in INR, and you hedge the currency depreciation risk. And rupee does depreciate. On average, it depreciates, close to 3% a year. And as long as you have revenues that are dollar denominated and costs that are rupee denominated primarily, I think you have a double positive on that front, and a natural hedge against the currency issue that often comes up when we talk to our investors.
Yeah, I was once in a deal that had all their operations and developers in Dublin, which uses the euro, and
Right.
the sales office was in London, and which is sterling, British pound, and it was going great at 1 minute, and then all of a sudden, you imagine, what are your monthly expenses, what are your monthly revenues, what's your burn rate, what's your cash position, what's your runway, and all of a sudden they got murdered, and it was going great 1 minute, and then it flipped the other. If the rupee thing is consistent, then it sounds like a double positive win for you. That's interesting.
Yeah.
I think I was once in a meeting in Poland with PFR, and the government was putting money into Polish VCs funding Polish startups, and I remember thinking to myself, no wonder Larry Ellison never heard of your company if you're all the way over there in Krakow with a Warsaw VC, and nobody's introducing you to the next family office Czech who knows you, or you've been working with Guy and Bill Reichert going back to the 1999 timeframe. That's the key. So I mean, these, you can have an analysis that some great companies are going to come out of here, but they need that fiber optic cable connection to network them into. Let's not wait for the ecosystem to catch up to China. Let's just get right into VMware. Like, I remember corp dev guy John Mills told me at VMware, they just wanted to buy anything in Israel. They just figured, we'll buy any company we can get our hands in on Israel, just so we can use that as a beachhead and hire people. Because clearly they're good over there. And I can imagine, somebody saying, let's just buy something in India to establish ourselves, and let's be multi-domestic. Like, don't send an American gringo over there to get confused, but go locally. Hey, so final question for you, Mohanjit. Did you raise any money for your funds in India? I mean, with Anand's Morgan Creek background and all that, you already knew the usual suspects around the world that are LPs, but are there corporations or family offices, and some of that wealth that you were describing of the different strata of, some people might get a $50 iPhone, but somebody else is like richer than anyone you meet in the US, right? What's
Absolutely.
What's your experience been in trying to raise money or successfully raising it in India, or you don't even bother?
Look, no. So our first fund, not the case going forward, or with a top-up fund, by the way, which is purely dollar capital, and it's these are Mauritius-based entities. But for the first fund, again, because we were just getting going, we said we've got to tap into whatever source of capital, accredited capital and sophisticated capital that we have. And it just happened to be that the initial bites came from Indian residents. And so, and these were, again, family offices, wealthy individuals. In addition to that, the Indian government has set up a fund of funds, but they can only invest, as one might imagine, in India domiciled entities. They're called AIFs. And unfortunately, there's also a restriction for Indian residents from investing in overseas entities, overseas funds, whose main target is actually Indian companies. It's something called round tripping. So the authorities don't like that. They say, hey, wait a minute, you're doing something funky. If you were going to invest in Indian entities, why not just invest in an India fund or set up an India fund? Why do you need to send it to Mauritius and have it come back to India? So that notion actually pushed us to set up an AIF, an India fund,
Yeah,
where about a third of our 90 million, so about 30 million, in 200 crores in terms of Indian currency, is actually from primarily Indian investors, and about 60 million in commitment is Mauritius dollar investments. And so, to answer your question, yes. So we're a mix of overseas investors. We've got family offices from Europe, from the U.S., a fund of funds from DC, et cetera, for Fund One, and also the two governments. So what used to be called OPIC, Overseas Private Investment Corporation, which is now merged with USAID, and there's a new acronym called US DFC, Development Finance Corporation. So they were the anchor in Fund One on the Mauritius side, and the Indian government fund of funds was the anchor on the India side. So we tapped into whatever source we needed to get it done. It took us, very honestly, it took us 18 months
I
to
can
get
imagine that. Compliance in India, it sounds like a little bit of pain, but it was worth going through to get around they didn't want to trombone the money out to get it back in.
Yeah. I mean, it adds overhead, it adds paperwork, bureaucracy, and so on. But we got it done. Thankfully, Fund One is doing well, and so companies are really getting at least a handful of them are getting massive tailwinds. During the pandemic, including one that I failed to mention, but I will before we end this, is a company called Unifor, which is a conversational AI company that started in Chennai and now is headquartered in Palo Alto, of all places, and doing remarkably well. Especially in 2020, where remote productivity is obviously something that enterprises are looking for. So I mean, but the top-up fund and a fund two will be purely non-Indian institutional investors, we think, including some sovereigns from other parts of the world.
Well, I think you've got a crisp pitch to the LP community. So good luck with that. And we'd love to share some deal flow and add our network to your network and getting some of these hits together.
Absolutely. That's what makes our business and Silicon Valley so special. So look forward to collaborating.
Okay, my friend. Be well. Take care and hope to see you soon.
All right. Take care.